Hey guys, DTech Lifestyle here, back with another video. This one here is from a month ago, unfortunately, but it took place for institutional investors, and it's called the CC Data Digital Asset Summer, and it's for institutional investors. So I'm going to play you a few clips from the video because it's like 8 hours long. So I'm not going to go through all of it, but there's some pretty important snippets in it. They talk about regulations, they talk about banking sector, they talk about so many different innovations that are coming in. Well, not innovations as such, but people building, companies working together, building this new digital world that we're in, really. Anyway, hear this.
Hope not too much longer, right? But I'd say, it's one of those things where the last couple of quarters, we've really felt, I guess, the need to kind of just think about, well, how do you just run a business when it's in a period of stagnation and there isn't a lot of kind of hope in the near-term horizon. And to be honest with you, I don't think it's necessarily something that's specific to crypto. I think it's just general business management and practice, like manage your costs, think about how you're going to grow, build products customers actually want to use. I think there's an element of this whole season that really helps, I guess, kind of this longer term innovation trajectory. I'm a big believer that, when the tide kind of receded and everyone was kind of not, I guess, kind of just seeing money sloshing around, people really are pressed to either you build stuff that has commercial viability or you don't, and you don't survive. And I think that's been the critical difference between invention versus innovation, right? As in, invention is something that's just, novel. But innovation is when you actually find a real commercial use case for this thing, and that people find value and are willing to pay value for it. And I think that's helped to push people along. I think, for us, as much as we'd like for the environment to get better, I think we found ourselves in a position where we've tried to be disciplined as much as we can to ride this out. And I think we've seen others in the space as well. And I think they're generally signs of good people that are in the industry, players that are trying to build this for the long haul. And I think that's really what we're wanting to see, is just people survive building this thing, doing the right things. Hopefully when things get back into, a bull market, that we're going to see, I guess, kind of an upgrade as well, just in general, of the products that are on the market for consumers and customers, et cetera. So,
Oliver, did you want to add in?
No, I mean, yes, always, but
we can.
Yeah.
Dan. So you've been through different cycles, right? You said 2013. How is this one different? I mean, you mentioned it's better. Or is there anything that was tougher, or anything that that's
I mean, when we look at crypto cycles, it's one of the hardest sort of industries to build a business in, because you've got a monsoon versus a drought type mindset. In the bear market, it's a drought. There's no rain, you got to cut expenses, you got to cut down to the bone on headcount. My former employer, Kraken, I haven't been there for a year, went through layoffs where they cut like 30% of people. That's pretty extreme for most other industries, but in crypto, I think it's very appropriate. Coinbase, Kraken, and other legacy players in the space have been around since the 2013 cycle. They've seen how deep you need to cut in the bear. But in the bull, how do you plan for the bull? And that's where your expenses might triple or quadruple, your headcount will do the same. And that's what's really tricky is, if you've got that too bearish mindset, you might not apply yourself in the bull and go allocate capital and go grab market share when the bull run comes back. In terms of how the cycle is different, I mean, honestly, this feels quite mild. I've traveled around the world. I was just in Korea, Singapore for Token 2049. I've got this conference, another one, and then also Bitcoin Amsterdam. From what I'm seeing on the ground, there's still tons of businesses being built. Lots of interest from people wanting to build, join companies, or just interested in crypto in general. So I think this is a mild winter.
If I can attempt to connect these 3 points, I think there's two that's about the quality of innovation, and one about what it takes to be the right size of cost versus revenue to survive whatever it takes. And I think in the past we've seen a lot of amazing innovation solving problems which don't really exist yet. And I think the ratio of solutions to problems is a lot healthier now. And when we go through these bear cycles, we have to figure out what is the right size and shape of your organization to push through. It is the narrowing of scope to those solutions which really matter now. And credit risk being taken into account.
Michael, what about from the exchange perspective, right? Or just from like a market's perspective, are you seeing people putting in place the right things so that if sort of things take off, if they are offering lending or margin, it's done with more checks or like even hiring people who've had experience in this? Because in some cases there were like people doing checks that had never done it before.
I mean, it's kind of like what Oliver's saying, like the trend of more two-way DD happening has increased. I still remember like the week of FTX, all of our clients sent me 20-page questionnaires that I needed to fill out. And it was one of those things where thankfully we had a lot of the answers like ready to go off the bat. But it was very clear that everyone was trying to basically catch up on what they had not been doing, which is, trying to really dive deep and understand, to what level of transparency do people have providing, for example, things like finances or whatever it might be, right? And so there was a big rush for, I guess a couple months around proof of reserves. That's kind of tailed off a little bit recently. But on our side of things, we were kind of like fortunate. We said, hey, actually, we've got an audit from Deloitte. Do you want to see that? And they're like, we didn't even know that was a question we could ask. So, there's been more and more scrutiny around this, which I think is generally good. It also, I think, converges closer towards, what best practices people have when they're managing billions and trillions of dollars, which is kind of where we need to go to, right? That's what we want to see. Right. I mean, it's funny. The other day we were sitting in Token, and our CEO was sitting, next to the CEO of Franklin Templeton, and he kind of did a friendly reminder. This lady over here manages $1.5 trillion, which is about the market cap of crypto, right? So there's an element of there's a next stage that we're all going for, and I think that this pushes the maturity towards it, and I think it's a good thing. People are starting to ask more questions, and I hope that the industry keeps up in terms of being able to provide the transparency that's being required.
Nicholas, are you going to add something?
Yeah, so I think one of the things that's kind of ignored is how successful DeFi was during this kind of downturn that was triggered by this lapse of risk management, right? When you saw the CDFI lenders like BlockFi and Nexo and Celsius kind of blow up, right, due to the contagion, did DeFi blow up? No, they didn't. And actually, these same CDFI kind of companies, right, which were some of the biggest users of these DeFi protocols, did they pay back their creditors? No, they didn't. But guess who they paid back? They paid back the DeFi protocols, right, to unlock their collateral that they had stored in those protocols. And so I think it has to be said, like, how impressive it is that DeFi was able to make that jump from the previous cycle kind of beforehand, where you saw I think probably Cream Finance is a good example, right, of a DeFi protocol, right, that was just had outlandish risk management, right, and eventually just became insolvent, right, versus other DeFi protocols kind of learned from that example, took very appropriate risk management in the previous cycle, right, and you did not see Aave blow up, you did not see Compound blow up, you did not see MakerDAO blow up, and I think that that should be celebrated a little bit more.
Yeah, I think that is really underappreciated by TradFi, who kind of see DeFi as this big miasma of WTF. It's coded incentives. It doesn't rely on any human's finger on the button to send or not send money, to apply or not apply a yield. It is a market-driven open box thing that you can DD by looking at the code. And yes, that brings its own risks and shortfalls, like platform risk and protocol risk. And like, we still haven't really solved the anonymity versus privacy problem in DeFi. But to your point, it's there's fewer dragons in DeFi than you'd imagine.
I think there's a little bit of nuance here where DeFi, we've reduced counterparty risk almost to zero, which I think is a huge, incredible achievement. And I love the promise of DeFi, and I think that's what we're all working towards in this space, is we want to build financial architectures that are decentralized and remove that human finger on the button. However, I think it'd be remiss not to bring up all of the protocol risk involved, which is quite substantial. The amount of hacks and exploits that have occurred in DeFi are, I think, enormous. But I don't want that to overshadow its capabilities and its future. But I think that is something important to note.
Aren't there if you want to get a big institution to go in heavy? Is it they just don't? Is it there's a lack of narrative now? Is it, we're missing some, is it the regulation? What are the things that really need to be in place still that aren't missing?
So liquidity is still such that you can take spot risk, but you can't hedge it. I mean, there are options out there, but the market, oh gosh, I was surprised to learn this gigantic stat. There is actually a gigantic options market, to my surprise. But to get TradFi engaged in that risk management component of the markets, we need a crypto ISDA. Because right now everybody's got their own structure, and it's all kind of similar, but a standard master agreement that the world can agree on for these instruments would enable large tier ones to engage on a common understanding.
I in Asia recently, and he was like, well, if I allocated 1% to this, it would just completely blow out kind of, the guardrails around, how much I can be in the market type of thing, right? Like if I can't actually deploy enough to make it meaningful at the moment, why would I spend all of these very precious resources in terms of people and time to figure it out right now? So there is a little bit of a waiting game around that, in addition to also the things that I mentioned earlier around regulatory stuff. So.
If you'd like to come to the stage, they're going to explore trends in institutional adoption of digital assets.
Sit next to each other?
Yeah.
Cool. Hello, everybody. Thank you, Katie. What an awesome introduction that was. And yes, second day, it's a little bit weird, but great to be on stage. So I'm James Harris. I'm the Chief Commercial Officer at Zodia Custody, which is a FCA-registered custodian based here in the UK that is also backed by Standard Chartered Bank, Northern Trust, and SBI. So thrilled to be joined here by Jenna Wright, MD of LMAX Digital. LMAX Digital have been supporting the institutional ecosystem here out of the UK for a very long time, and we're very grateful for them. They're consistently highly rated in CC Data's exchange benchmark review, which is very well followed, and institutions pay a lot of attention to it. And LMAX is very much an institutional venue of choice. So I've got some questions for Jenna that we've prepared, I think, and we'd love to have some audience questions if we've got time. So please do put some questions on Slido. We'll try and tackle them if we get a chance. Jenna, here we are again.
Yep.
1 year on. Do you want to say hi? Introduce yourself?
Yeah, hi. For those of you that don't know me, I look after LMAX Digital, the spot cryptocurrency exchange within the LMAX group. We are exchange operators at the core in foreign exchange. So we've been doing that since 2010, and we launched LMAX Digital, the institutional-only crypto venue, in 2018. In crypto veterans.
Absolutely.
Yeah, and here we are.
You've been running that since the start.
I have.
Seen it all the way through.
Look, they've been in this thing since 2010. When are people going to wake up to this whole new digital world that's been evolved around us? 99% of people are asleep. This video may be a bit choppy, but that's what it is. It's going to be like that for me. You're going to get what you get. If you don't like it, you don't like it. Do you know what I mean? If you like it, please like and subscribe. But these things are happening right in front of our eyes. They've just said to you, they've been involved in it since 2010. When will you lot wake up?
Yep.
Amazing. So look, a lot of change in the last 18 months. People have moved, that kind of thing. Firms have blown up. But of all the developments, which have been the most significant to you at LMAX Digital? Have you found any sort of positives in this bear market?
Always positive, James. Yeah, look, it's been the reputational contagion attached to many black swan events that took place last year have had a knock-on effect in terms of institutional adoption. Would be naive not to accept that. But I guess the good thing about what we've been trying to do is operate in a regulated environment like we would in FX and like we have done for way over a decade now. So I guess in the last year, it's provided. Look, we launched in a bear market, and we're back in a bear market. So it doesn't feel like
to be often in a bear market. But
and if you operate in capital markets, you should be used to these cyclical trends. So it's not concerning for us. I guess having a bit of free time where you're not running around like crazy lunatics in 2021 trying to support the trading volumes, you get a bit of time to get your operational setup and in the best position it can be. So this is not new news that we should operate in a horizontally integrated model. No. But the reality is the space has been operating very much vertically for our entire 5.5 years in space. So by that I mean it was okay and normal. The infrastructure wasn't there for the likes of an exchange to do every part of the role of the ecosystem. And I think that was very obvious in November last year, and which caused the problems. You've got trading arms, exchanges, custodians all doing the same thing under one roof and no separation of powers.
That's right. So you get this concentration of risk in individual entities, like we saw with FTX, effectively conducting the entire trading stack, looking after assets, trading assets, lending assets, which is anathema, isn't it, really, to TradFi institutions. They can't do that. And there's an irony there, I think, when you look at the way that TradFi currently trades, it's actually, at the service provider layer, quite decentralized. You've got various different firms doing various different functions that they're very specifically doing. So do you think the market's going that way, digital assets?
Yeah, I mean, it's difficult. I think when we see a flurry when we move towards, real money asset managers entering the space, they will only be able to operate in that fashion. So to your new employer, we partnered with Zodia Custody this year to work with them on the off-exchange settlement piece. We want real money asset managers to feel comfortable that they can park their funds in a custodian and execute on the LMAX trading venue. And the two are very separate. And I think that is the model going forward. Obviously, we would like the ecosystem to come together. It becomes quite difficult as a venue to integrate to every custodian. So the more we can all come together to work together, that provides the infrastructure that asset managers and the likes are used to and are comfortable with. So we definitely need to push more down that route.
My panelists to introduce themselves today and tell you a little bit about them. If we could start with Lisa, please.
Yeah, thank you so much for having me here today. I'm Dr. Lisa Cameron. I'm an MP in the House of Commons, and I have the privilege of starting up and chairing the all-party parliamentary group for cryptocurrency and digital assets in the Parliament. So I've been doing that work now for 2 years. You've all kept me extremely busy. It's a fast-paced sector, and we continue to upskill ourselves in the Parliament to make sure that we can do this dynamic sector justice moving forward.
Hi, I'm Jeff Horowitz. I'm the Chief Compliance Officer for BitGo, one of the largest institutional custodians. Been around 11 years now, and excited to be here and to talk about regulation and what we're doing well and what we're not doing well.
Good morning, everyone. Very happy to be here today. I'm JB Graftio. I'm the CEO of Bitstamp. We have been in the crypto space for more than 12 years and very happy to share more on our journey, especially around regulation.
So, first question for today. How can governments around the world not only address the risk that digital assets can present, but also really harness the potential from digital assets and the underlying technologies? How do you think governments are working to manage those two questions? Who'd like to go first?
I'm happy to go first if you... I mean, really what we've had to do in Parliament is to get ourselves up to pace with this industry and this sector. So working across the House of Commons and the House of Lords, when I started, it was very much with a consumer protection focus, which remains at the core of the work we're doing in the Parliament. I had a constituent contact me, which of course is where all of our work emanates from, our constituents who'd experienced a rug pull scam. And at that point in time, we weren't really doing anything in the Parliament. There had been no debates, there were very few questions, but we looked at what was happening across the UK, and millions of people were engaged in the sector. So we knew that there was no going back, that this sector is here to stay, and that actually what we need to do is manage the consumer risks, put the regulation in place and harness the potential. Because when we looked at this industry very closely with the blockchain technological advancements, we felt we really have a digital generation ahead, and this is like a new industrial revolution, but it's going to be more than industry. It's going to be culture and art, sports, etc. So we need to get ahead of it, and we want the UK to be at the helm of this moving forward. So we've really been doing so much work to bring industry, to bring regulators and legislators together, and consumers, to make sure that we square the circle and take this work ahead.
Thank you, Lisa. Jean-Baptiste, we talk in the title of this panel about regulatory uncertainty, but in Europe with MiCA, are we more in the realms of certainty than uncertainty now? How do European companies feel?
Yes, I would say, if you take into account the regulatory landscape today in Europe, it's very, very complex. It's very fragmented as well. Each country has its own approach on crypto today, which means that for crypto operator, you need to apply for a VASP in some countries, in some type of other licenses in other countries, and in some other countries in Europe, you don't need to have any registration to operate. So as a crypto operator, we need to navigate around, this regulatory transition, if I can say. I would call that, regulatory patchwork, because of the complexity, because of the fragmentation, and it's extremely expensive also to maintain. Which means for us, essentially, MiCA is very important so that we can establish a level playing field across Europe, essentially, to have clear rules for accessing crypto for crypto asset service providers. We feel also that MiCA is important to increase consumer protection, which is the key, essentially, to drive some level of adoption for consumers to enter the crypto space. So what we see in MiCA essentially is, establishing level playing field, increase consumer protection, and basically helping firms to navigate, around the market, to avoid the complexity that we are experiencing today, to avoid the fragmentation that we are experiencing today. And ultimately, that will help us also to reduce our cost in terms of legal fees, in terms of regulatory fees that we are experiencing today to stay in compliance. The key part as well is that with the freedom to provide services in the EU, you will establish your entity in one country, get MiCA, and then you can passport across all EU member states, which is extremely compelling to drive the business, essentially. And the other point is that the rules in terms of governance, risk management, compliance, will be there, which means that it will be clearer, at least in that region, to stay in compliance versus potentially the US, where there are litigation, there are court cases to try to drive some level of clarity in the regulatory landscape. So for us, from a Bitstamp point of view, we are very supportive of MiCA, essentially, for the reasons I just mentioned. Really to try to establish that level playing field and be in an ecosystem where, if the rules are clear, that will drive adoption for consumers, but also essentially institutional players entering the space.
So a positive for industry. Jeff, Jean-Baptiste talked briefly there about the US. A slightly different approach happening now in the US. Do we have a view as to what the US thinks of other frameworks that are happening around the world? And is there a risk on the US not having these frameworks in place soon?
Absolutely. I think we've recognized that we're far behind many other jurisdictions, whether that's, MiCA in Europe or Dubai or Singapore who come up with a framework. We're still, grappling internally. Our legislators write the law, our regulators manage and enforce those regulations. And some of those think that our existing rule book works just fine. And I disagree. I think we have a new innovation. We have this peer-to-peer technology, and our rule book needs to be modernized. I've been in crypto for 6 years. We're still having the same conversations over who has jurisdiction to bring enforcement cases rather than who can actually answer some questions. And what's resulted is we are now in the courts because neither our legislators can pass a framework and our regulators won't answer questions. So we have no choice but to go to the courts. And that does nobody any good. Our investors, our consumers still don't have the protections they need. And we have lost the innovation battle. I think we were one of the first countries to get heavily involved in crypto, and it could have been ours to win. And now we're at the point where, while we're not leaving the US, we are hanging our flags, working on our license in Dubai, because they've taken a very practical approach. They're not going to spend 3 years deciding what's a security and what's a commodity. They've taken 6 rule books and said, what are the risks that we need to address in each of these rule books? That's a common sense approach. We have some principal regulation with the CFTC, but we don't have it like the UK as a backbone. And I am worried from being a U.S. citizen that we are losing that innovation battle. There are risks we need to address, but are we going to throw it all out and throw out all the innovation that it can bring?
Thank you. We make initiatives. How does that compare to MiCA? And can you talk us a little bit through what the UK is doing at the moment, please?
Yeah. I mean, we started off, as I say, upskilling ourselves. So we had lots of industry come to speak to us. We had round tables in the Parliament. We really started from scratch. So we had some meetings where people were talking about fiat, and some of the members of the House of Lords were saying, why are we talking about cars? Isn't this about finance? So, we really had to bring ourselves on quite at a rapid pace there from that point of view. But
Sorry, I had to laugh. They did not know what fiat currency was. Seriously. Some of them thought they were cars. Anyway, this is going to be a bit of a long video today because I think I want to go. This is 8 hours of content, which I'm going to try and condense as much as possible and pick out the bits that I think are important, because what this lady's saying and what that guy just said about the issues in America, in particular CFTC and the SEC and also the regulators. You have Gary Gensler, who is at the forefront of stopping an awful lot of what's going on in America. And he said about 3 years, it took about 3 years for XRP to be taken through the ringer and now to have clarity. XRP is probably the only currency apart from Bitcoin and Ethereum. Ethereum slightly dodgy ground at the moment. Like I said to you guys before, there's stuff going to come out about that, and I've played you some couple of videos, and I think you can look through them. I can't remember the titles, but there is some issues coming down the line with ETH. Anyway, guys, we carry on.
From that point, we have done about 18 months now of education in the Parliament. We've had a number of inquiry reports. We've had bills moving through the House. The next stage of our group, and we want everyone who's interested to get in touch with the All-Party Parliamentary Group, because it's your group as much as it is mine. The next stage is to look at international best practice. So we've been to Zug. We've been speaking to legislators there. We've been arranging to go to Paris and Brussels, and we're thinking also about engaging with Singapore and with Dubai, and we want to look at what is the international best practice and where can the UK take a bespoke approach that fits for the framework that we want to set here, but only when we can look at that, because there's going to be, I think, have to be some sort of interoperability as well globally, and a set of standards as well that overarches
Interoperability, what does that sound like? XRP to me, XRP is an Ripple Net ledger is an interoperable ledger, as is Quant, as is there's quite a few on the ISO standards, which are from, i.e. WF, WHO, and BIS. They're all got those particular currencies on their websites, and they're clearly interoperable with each other, and this is what they're moving to. And I'm glad she mentioned that, because that's an important topic, because there's no point in having walled gardens like JPM coin. That's a walled garden.
Things, although different jurisdictions will do their own thing to some degree. So, but those are the sort of elements we're working on, that what can we pull to the UK? We're not generally the first mover, so we're pleased that MiCA's there, and we can look at that and then look at what we want to adopt and where we can kind of have that bespoke approach for competitiveness in the UK.
That's really interesting, thank you. So you're looking, further than just MiCA, because I think many were waiting to see if the UK would just copy MiCA, or it's interesting to see, we think government...
No, I don't think there's going to be any copying of MiCA, but obviously where things are working, then you don't, no, exactly. the UK doesn't want to invent something entirely new, but we have to have what fits here, and it's a bit like having something bespoke, but also with a competitive edge. And it's, is it MiCA, is it MiCA, potatoes, potatoes, we all have different impressions. So.
Anyway, this is great. This is great stuff. I'm glad I'm taking the time to go through this, to be fair. It is going to be a long one, guys. So if you like it, like and subscribe. Here you're going to hear from Alicia Ostrov and Helen Boyd. Alicia Ostrov is CC Data, and Helen Boyd is from the Financial Conduct Authority, the FCA in the UK.
Hi everyone, my name is Alyssa Ostrov. I am the Chief of Staff at CC Data, and as Katie mentioned, I have the distinct pleasure today to be joined by Helen Boyd, who is the Head of Department for Capital Markets within the Infrastructure and Exchanges Division at the FCA, where she oversees teams working across wholesale policy issues relevant to capital markets and the supervision of benchmark administrators and credit rating agencies. She leads the FCA's wholesale crypto asset policy work streams and is currently assessing future regulatory frameworks on market infrastructures, intermediaries, issuance and disclosure, and market conduct as part of the FCA's broader commitment to the regulation of crypto asset markets. So after that introduction, hopefully Helen can tell us a little bit about her journey. You've had a really impressive tenure of 15 years at the FCA. When did you first make the break from traditional wholesale financial market regulation into digital asset markets, and what was that experience like?
Firstly, thank you very much for the invite today, and thank you for that very lengthy spiel about what I do. It is a very big piece of work that the department is covering. I should say I haven't entirely taken a break from the traditional finance space. A lot of what the department still do is setting the rules and regulations for the traditional finance space, but we felt there was value in bringing the wholesale crypto policy to sit alongside that work, because as I'm sure you'll hear a mantra well used through many of the debates and possibly well used today as well, same risk, same regulatory outcome is very much what we're looking to deliver here. So within the FCA, we've been doing a lot of work in the last 18 months to particularly think about what that would mean in the crypto space. What are the specific risks in crypto that we need to be worrying about? And what are actually the things that are actually very common, very well-known risks that we already see in traditional finance? And I think the last panelists were talking a lot about the problems with risk management that were faced by FTX and others. This is not new. That need to have good governance, that need to have good systems and controls, that is frankly bread and butter for a regulator. That is what we're here to do, and make sure that people have clear expectations and that the bar is remaining very high. So my team, I'm very pleased to say, have been growing over the last year. We work very closely with the retail policy side, as I'm sure you can imagine, because there isn't that clear dividing line between policy for retail and the policy for wholesale. And we're bringing forward our ideas at pace to think and work with the industry. I think one of the key messages I'd have is that this is still it is an unregulated space. The FCA currently has quite limited powers, but we are looking at what the future is bringing, and it's going to bring quite quickly as the Treasury moves towards closing its consultation and setting out that new framework. So we're trying to be ahead of that. We're trying to think about what that power will look like and how we can best deploy it to understand the risks, the opportunities in this space. And I am a regulator. I'm going to spend a lot of time probably today talking about risk. Apologies in advance, it's what I do for a living. But we're not blind to the opportunities either. And it's about balance. It's about finding the balance between a good regulatory regime. A clear regulatory regime can in itself be an advantage to a jurisdiction when it's trying to sort of set out its stall in a marketplace that is highly global. People want to know what the rules are. They want to understand the rules of engagement, the functionality that the regulator is going to provide. And for us, it's about making sure that we're on the pitch in the right way and we're creating that balance between the appropriate risk management, but also facilitating the innovation, supporting it when it needs support, understanding where regulatory barriers, perhaps which were traditional finance were appropriate, perhaps need to be looked at again when we're looking at the new and novel asset class of crypto.
Absolutely. And I think on that note, obviously the FCA has stated that crypto assets are one of its focus areas for 2023 and 2024. Could you give us just a little bit of an overview of the legislative and regulatory process in the UK and at what point the FCA enters in this operation?
Absolutely. So the FCA is an independent regulator. Sorry if everyone knows that and that's boring for everyone to know, but useful to set out the stall that we only get our powers when they're given to us by the Treasury. At the moment, we are still waiting for that power to be given to us. That doesn't mean we're blind to the fact that that consultation has been out from the Treasury for some time. It does set out a pretty comprehensive framework, which we are anticipating being substantially where the regime will head. But we do have to wait for Treasury to firstly publish the results of its consultation and then move forward with the legislative part. As soon as that is done, the FCA will be in a position to take forward those new powers and work out what the regulatory framework is that we will be writing the rules for. And as part of that, we are going to want to talk a great deal to the industry. We want to get your feedback. We want to understand what risks you see are prevalent. And many of you, I'm sure, have spent the last 6 months talking about the risks in crypto. It's what people have been spending times on panels talking about. We want to make sure we have completely captured what your understanding of the risks are. We'll want to understand what the challenges are you're facing and what an appropriate risk management approach would be. We want that engagement to be timely. We want it to have wide breadth. We want to hear from all players in the market. And we'll want to make sure that we're sort of drawing that into our framework as well as we can. So there's going to be quite a big lift of consultation in the next few months again, and probably into some years, I suspect. This is a long phased approach that the Treasury is setting out. But we very much see this as a partnership, and we do very much want to make sure we find that balance, the balance between good risk regulation and the right outcomes, and also making sure that we're supporting this new and innovative world.
Absolutely. And just staying in the UK for a minute longer, I think one of the prominent issues that's top of mind this week is the forthcoming introduction of the financial promotions regime in the UK. I think we're just a few days away here. What are some of the key things for our attendees to bear in mind?
Yes, so the FinProms rules, as we refer to them, financial promotion rules, are an important step change. They do bring in the same minimum standards for crypto as for other high-risk investments, and we really think that's important for the retail buyers to understand what they're buying and what the risks they're getting involved with are. So as of the 8th of October, just a few days away, the legislative change will mean that all crypto ads will need to be approved by an authorised or registered firm. But we do understand that there are some firms who may need some flexibility. So our rules around promotions, for those firms who do need that flexibility, please come and talk to us and we may be able to extend some flexibility to you to the new year. But we do think this is an important step change for the crypto world to somewhat come to terms with the fact that you have to fall within the UK regime on this particular aspect. I did also want to mention the travel rule very quickly. We are one of the first wave of regulators to bring forward the travel rule. We're very keen that firms understand and adhere to it. It's obviously an important change that will help us understand the risks and the transparency around crypto. So another important piece of the legislative framework. The third that's also perhaps worth a mention, sorry, I'm slightly hijacking your question, is the stablecoin regime, which sits somewhat to the side. It's obviously being consulted on back in 2022. It will bring forward changes to the e-money regulation and also to the payment services regulation for stable coins that are being used for payments in the UK. So that will be an important extra limb of the regime. So whilst I talk about the wider regime on the wholesale side, there are actually quite a few pieces of regime coming forward somewhat sooner.
Thank you.
Right, guys, I'm going to end it there. This is a bit of a long one, and I might come back to this again to extract some more information from this particular summit, because to me, they're moving forward. Where the America is holding back this new bold way of transacting money. They're holding it back for some unknown reason. I think it could be to do with the fact that these wars, they need to fund them, because after this way of doing business, once this way of doing business is implemented fully, they won't be able to do that, because there'll be more accountability. And I think this is why America's blocking what they want, what they are doing. And I think it's a deliberate act. Whether it is or not, I don't know. But anyway, if you like this kind of content, like and subscribe. Take care, guys. I'll speak to you soon. Do check lifestyle out. Have a great day. Remember, stay safe. Don't get scammed. And do not fall for that XRP scam that's going out there, where it's Brad Carlinghouse as some AI generated thing. Okay, take care. Bye.